Alright, I want to show you Soybeans day trade. It's a strategy that I developed along with Python a couple of years ago, and if you've read some of my books on rule isolation, you'll know how I have sometimes separate and independent entry rules. Soybeans day trade, I've tested the two different rules, and recently I took out the original Python rule. I noticed some quick patterns in the soybeans market at the open, and I wanted to adjust that 2.5 years ago, so the beginning of 2009, and I included two different entry rules, the new pattern from 2.5 years ago, and then the Python rule, which is a carryover from the stock indexes from 10 years ago. And I wanted to test this recently, and the Pythons have not been doing as well in this market across the board for any of the markets. So I took out the Python rule and stayed with the one rule that I added 2.5 years ago, and wanted to show you the results for that. That one rule itself has done great, and this is a new strategy that I'm going to call Soybeans Day Trade 2 right now. And you'll see the results here: $39,100 profit. Let's change this to currency. You'll see the maximum drawdown is 43.25. Now I've got the chart up here. This is July soybeans, and I don't have it set up right. It's showing May, and so there's some gaps in here showing the May. So the last few trades are not as accurate, but got the going back to, let's see here. We're going back 3 years on this, and you can see the equity curve, almost $40,000. There's no slippage and commission taken out, but you look at this huge average trade profit is 176, 221 trades. Like I said, going back 3 years, a profit factor of 1.79, and it trades right towards the open of the day. Let's look at the periods on this. Look at the annual, and let me expand this up so you can see it. Let me pull it up again here. Hang on. See, here it is again. You can see the profit in 2008 was huge profit in 2009. Average profit per trades on those are 219 in 2008. Again, it started in May of 2008. So I'm only going back 3 years on this. And 153 in 2009. Not much profit in 2010, but so far this year it's made a comeback. Average profit per trade 233. Really good strategy to trade. I really like this equity curve. I really like the results, and so I'm going to call this Soybeans Day Trade 2. It's something that I'm excited about because I wished I would have tested this rule isolation rule sooner instead of keeping those two together. It's hard to see sometimes, so it's hard to catch everything when you're looking at a lot of different things. But I'm excited about this strategy. I want to show it to you in TradeStation as well. Alright, here it is in TradeStation as well. Pulling the performance summary, going back to the beginning of soybeans, 8/1/2006. Take a look at the results: $56,000, $184 average profit per trade. We're not taking out any slippage and commission, but there is a lot to work with right there in that average profit per trade. 47.12 maximum drawdown. Here's the graph, great equity curve. So this is a very simple rule, and I'm excited about this strategy. Something you can trade along with low frequency portfolio or a standalone strategy. If you want to just trade one market, or if you just want something for soybeans, I suggest taking a look at this strategy. Saw the equity curve here, the periodic returns. You can see not great in 2010, nothing much happening, and then picking back up again in 2011. Maybe we'll have another year like 2008 or 2009. And again in 2006. This only starts in August of 2006, so not much history in 2006, even though that was a low year. One of the reasons is because soybeans did not start trading electronically until August of 2006, and before that it was pit traded. So we're testing the electronic contract out here, and that is Soybeans Day Trade 2. It will be on the website. You can click on the links and see that and get more information on the performance summaries.